tonight's presentation. So if you want to share with friends and family later, we'll be sending it out after the fact. So really today, what better night than tonight to talk about Social Security and getting a better understanding of, what the potential benefit you could be receiving. My name is Mark Sullivan. I'm a certified financial planner. I'm a vice president relationship manager that works with individuals and families at TimeScale. Really, our purpose today is to simplify, educate you on all the fun stuff that is related to Social Security. You've been paying into this system your whole life. Hopefully you'll be getting a good benefit on the way out. So we can talk about that today. We're going to talk about the financial planning framework, answer any questions on how Social Security fits into your entire plan, and obviously, of course, offer practical guidance and suggestions. So the outline with any presentation we do, we always start with our empowered approach to financial planning. I'm going to talk about, the high level Social Security and then really the benefits you may be getting from Social Security depending on your own situation. Please, I'll kind of see how Social Security fits into your plan. And then as we go, please feel free to utilize the Q&A or chat box as we go. I'll feel free to answer any questions. I did see someone raise their hand, but utilize the chat box and I'll answer any questions as they come. And I'll try to pause as best as I can. And then of course, at the end, I will stop and wait to see if anyone has any additional questions. And of course, if something from tonight sparked a question or concern or additional thoughts about your old financial plan, please reach out to either myself or your own relationship manager to clarify anything and make sure that, the discussions we're about to talk about today make sense for your own particular situation. Okay? Let's have some fun. Let's get into it. So the framework, we always start here, right? Talk about your goals. So if your goal is retirement and Social Security is a part of that, how does that work in terms of you enjoying your retirement with friends, families, or whatever your goals are in that particular phase of your life? Two important phases. You want to coordinate and consolidate your assets so you know how they're working and are they working as efficiently as possible for you. Number two, you want to protect and conserve everything you've worked so hard for. So spending. So this is where you understand, money comes in, money goes out. You have some type of budget established before and during retirement. Just as important. Savings, this is money set aside for upcoming expenses. Investing, this is where your money makes money for your long-term goals, where you take on a little bit of risk for hopefully compounding growth and returns in the future. Phase two, you want to talk about tax planning. Social Security does touch upon this a lot. Risk management, fancy word for insurance. You want to make sure you have the appropriate amount of coverage based on you and your family's goals. And then estate planning, you want to be in control when you can't be, right? So if you want to get everything organized before things get really disorganized in life. So those are really the 6 key facets or segments within the plan. And really, again, what we're going to talk about today is Social Security. And as we always discuss, we always want to measure what matters to you. So if the goal is to how to best utilize Social Security and fit it into your, retirement plan, let's talk about it today. Okay. So understanding Social Security. What is Social Security? So Social Security was created to promote the economic security of the nation's people. That sounds great. So it was created on August 14th, 1935. This was part of the New Deal. And there's been different iterations over the years with survivors insurance, disability insurance, Medicare, and then supplemental Social Security income. So there's been a lot of changes over the years. If someone does ask the question, is Social Security going away? I don't know. But I would imagine that, from a political standpoint, usually people that do show up to the polls and vote the most are the people either about to collect Social Security or on Social Security. So it seems like some benefit that you wouldn't want to get rid of. And I know there's different ways they can create new ways to fund the pool that is, funding Social Security. So I think for now it's not going anywhere. So, let's figure out how to best utilize it moving forward. So what is Social Security? So Social Security replaces a percentage of a worker's pre-retirement income based on a lifetime of earning, right? This statement, some of you may have seen this come into your mail, right? This is a really important document. So this shows what the potential or estimated benefit you will receive at 62, your full retirement age at 70, right? It breaks it out for you. And these are just estimates to give you an idea or understanding of what you could, in theory, collect. If you haven't received this or seen a statement like this, super important to get your hands on it or create an account at socialsecurity.gov/myaccount or ssga.com. So this is where you would just create your own account, and through your Social Security number, they have your whole employment history and what you've paid into. And again, it will give you an understanding or estimate of what you may or may not receive. Okay. Retirement age, and I'm going to say this word a lot through the presentation, and I might refer to it as FRA as well. So you can see the different years of birth and what is considered a full retirement age. So we're probably looking at a lot of individuals from 1955 and on, and you can see that it kind of changed a little bit with the different months. So 66 in 2 months, 4 months, 6 months, 8 months, 10 months. And then 1960 or later, 67 is full retirement age. And this is something that can be changed or amended based on how things are going. But for now, this would be technically your full retirement age. And I'll get into more detail why that definition is important in terms of when and if you're going to collect. Okay. So, full retirement age, when to collect your benefits. At your full retirement age, you get your full benefit amount, right? Pretty simple, pretty fair, right? Before your FRA, or again, your full retirement age, you get a reduced monthly payment. The earliest you could start collecting is 62 years old on your own benefits, okay? Past your full retirement age, you get an even higher monthly payment. However, you can only earn these delayed credits until you are 70. So let's say your full retirement age is 67 years old, and for whatever reason, you're deciding to delay when you receive your Social Security. You can wait 3 years and delay receiving it. Every year you delay, you get an extra 8% benefit. And I'll go over those percentages in a minute. So that's how that breaks out from your full retirement age. And again, the earliest you could receive it is 62. The latest you could receive it is 70 or delayed. If you were born from 1943 through 1954 and you started collecting early, you would get 75% of your benefit. So simple math, if your full benefit is $1,000, you started collecting at 62, you get $750, right? If you get it at 66, you get the full 1,000. If you collected at 70, you get $1,320, right? Pretty simple. And then if you're born from 1960 on, and I know I kind of skipped a little gap there, the numbers just change a little bit. At age 60, you can see you get less of a benefit, right? It used to be 75%. Now it's only 70%. So in my example, if $1,000 is your full benefit, you're not getting $750, you're only getting $700 now. And now you got to wait longer to your full retirement age, which is 67. Now you get the $1,000. And since you're only having to wait 3 years from 67 to 70, it only jumps to that 124% because 8 times 3 is 24. So each year you get an additional 8%. Any questions from that? And please utilize the Q&A or chat as we go, and I'll try to answer as many as I can as I go. Okay. So when trying to determine what your benefit is or how it's calculated, right? First step, if you've worked at least 10 years and earned a minimum of 40 work credits, you are vested in the Social Security system, right? Wages are adjusted for changes in wage levels over time, right? So what they do is they find the monthly average of your 35 highest earning years. If you're saying to yourself, well, I didn't work 35 years, they just plug in 0 for the years that didn't calculate for the 35. The result is what's called your average indexed monthly earnings. And again, on the statement or on your online Social Security account, you can see this kind of breakout and calculation and estimate for you, okay? Just to give you a little bit of high level numbers or background. So I looked and I saw that the average Social Security retirement benefit in May of 2022 was $1,668. So that's the average. The maximum, the most any person could make, whether it's Warren Buffett, Jeff Bezos, well, Jeff Bezos probably not collecting Social Security yet, but Warren Buffett definitely is. The maximum benefit or the most an individual retiree could get is $3,345 a month, right? And the reason being is when you pay into Social Security, it's capped. So I believe this year or next year, the most you can pay into Social Security or money gets taken out of your income is $160,000. After your income of over $160,000, no more of your income goes into Social Security. So that's why if you make $160,000 or $5 million, you pay the same amount into the Social Security pool. So that's why, each year what they do is they increase that cap at what they tax, what's called FICA, or what goes into Social Security and Medicare. So that's why the maximum benefit is the same for a wide range of people, because that's the max that was put in. So just to give you a range of the average and the max of what someone would receive in 22. And again, it's important to note when you're thinking about Social Security and retirement, these benefits were designed to replace roughly 40% of your income. So if you're expecting this big check from the government to come in to solve all your problems, it's not going to happen. So you got to really start planning. Is it, money, and we'll talk about this, is it money from other sources of income, your retirement assets, other investment accounts to help get you to that lifestyle you want to maintain in retirement. Other thing to consider, and I'll get into this, is when you paid into Social Security, you were taxed. So they get you on the way in and on the way out, they're going to be taxed. And I'll get into that in a minute. Also important to consider, if you're going to apply for Medicare, those premiums are taken out of your Social Security paycheck. So if you're thinking, okay, I'm going to get $3,000, but then it's taxed and then your Medicare premium comes out of that. So that slowly, that benefit is starting to go down and down. So really important to understand, what are you going to net at the end of the day? Any questions from that? Okay. So this is really important in terms of planning when you want to stop working and fully retire and decide to pull the lever to start collecting Social Security. Social Security is a great benefit, but it's a big, big decision, because once you pull the lever to say, I want to start collecting it now, you can't undo it, right? So if you're at 62 and you start collecting it early, but then you're like deciding that, you can't putz around the house anymore, you don't have enough activities to do, and you just want to go back to work, maybe do consulting or whatever it is, your income could affect the benefit you're making, okay? And let me walk you through this. So if you decide to collect your Social Security before your full retirement age, remember that slide I showed you, that was important, before your full retirement age, and you make over $19,560 a year, your Social Security benefit, for every $2 you make over that, they're going to take $1 away. So if you're going to make $1,000 and you're going over $2, you'll get $999, and so forth and so forth and so forth. If you're at your full retirement age collecting Social Security, you can make as much money as you want. No benefits are withheld, no issues there. It's just while you're collecting before your full retirement age, it becomes an issue in terms of your income. So it's important to understand, if you're going to go get a job at Home Depot, don't make more than $20,000 a year, right? That's just an example of if you're trying to kill time and make extra income. If you're going to decide to pull that Social Security lever before your full retirement age. The middle block you'll see this year, full retirement age is reached. There's like a weird gap year where, you know, you can make almost $52,000 and they only deduct $1 for every $3 over that. So there's a weird year at your full retirement age. They give you a little bit more of a cushion. But again, if your full retirement age is 66 and 2 months and you made $100,000 that year and you collected your Social Security at your full retirement age, no limits, no benefits withheld. So that's why it's important to understand when you're planning, if you're going to decide to get a part-time job, or you're someone that, you know, feels like you may go back to work, make sure if you're going to start collecting those benefits, you know, you understand the implications before your full retirement age. Okay. Any questions from this? All right. So this next part, I'm going to spend a little bit more time on, because there can be some tricky scenarios, and this is more around spousal benefits. Okay. So let's just go through the rules first. So you can qualify for your spousal benefit if your spouse is already collecting their retirement benefits, right? So, and I'll go through examples. Another rule, you have been married for at least 1 year, okay? You're at least 62 years old. All right, those are the 3 rules. And then the other important thing to note, if you're born after 1954, is if your own work history earns more than the spousal benefit, you just collect your own. You can't collect both. And I'll walk through an example of how that may work or affect you in terms of how you collect yours, or maybe your spouse's, or how the math may work behind that. But usually what the Social Security office says is, if your benefit's $2,000, the spousal benefit's $1,500, you just get yours. You just get whatever's higher of the two. From their end, they're not going to give you $3,500. They're just going to give you whatever's more of the 2 options available to you. Okay. Another thing to note, your spousal benefit is not affected by the age at which your husband or wife claims the Social Security. It's always based on your own full retirement age. Okay. So I'll give you an example. Let's say your spouse decides to collect their Social Security early, but their full benefit, if they waited, was $3,000. So what that means is the full spousal benefit is 50% of that. So a spousal benefit is half of what your spouse would receive. So instead of the $3,000, it's $1,500. That's the spousal benefit, is the $1,500. Okay. So even if your spouse decided to collect their Social Security, if you wait to your full retirement age, you get that full $1,500. Okay. Another thing to know, right? So in that scenario, let's say your full retirement age is 67 years old. You wait to 67, you get your $1,500 from your spousal benefit. Let's say you're like, I want to see if I can get more than $1,500 and wait. On the spousal benefit, it doesn't matter. There is no delayed credits to you. So at 67, at 68, at 69, at 70, it's still going to be $1,500. Okay. So it's important to note, delaying the spousal benefit after your full retirement age does not benefit you. Okay. And to clarify, your spousal benefit is 50% of what their benefit is at your full retirement age. So again, in my example, if the spousal benefit is $3,000, you get half of that. So it's $1,500. Okay. So an example, spouse's monthly benefit at full retirement age is $2,000. The maximum you could qualify for is $1,000 or 50%, like I talked about. So if you wait to your full retirement age and your spouse has started collecting, you get the $1,000. If you were to claim Social Security at 62, your spousal benefit would be $650 or 35% less. Okay. So that is in the scenario where, let's just say your husband starts collecting his Social Security. You don't want to wait to your full retirement age, 67. You just say, I want to take it now at 62. So since you didn't wait, you're not going to get that $1,000. You're going to get a portion or a percentage of that amount, which is $650. Okay. So that's an easy example. I'm going to walk us through a more complicated example. And spousal benefits can be a bit complicated because I'm assuming you and your spouse weren't born on the same day. You probably didn't earn the same exact amount of income. So there's a lot of different variables or variations when trying to come up with the best way to start and end in terms of collecting the benefit. Okay. Any questions just from these examples thus far? Okay. All right, so this is a lot of words on the paper, but I'm going to walk us through this very slowly. So Sally has a full retirement amount of $1,000 per month. Okay, so if Sally would have waited to 67, she would receive $1,000 a month. Sally decides she wants to start taking it at 62. So she gets 70% of her benefit, which is $700 a month. 5 years later, Jay, her husband, who is now 67, starts to collect, and he has a full retirement amount of $3,000. Okay, remember that you can't get the spousal benefit until your spouse starts collecting. So when Jay starts collecting, that's a triggering event for Sally to maybe start collecting on her spouse. So at that point, Sally becomes eligible for a spousal portion of $500 per month. Now, how does it come to 500? So a little bit of math here. 3,000 is the full benefit Jay receives. Half of 3,000 is 1,500. And what you do is you subtract the full retirement amount that Sally would receive, which you're left over with $500. This $500 is added to the existing $700 Sally was receiving for a total of $1,200 a month. Now, I know that's a lot of numbers and confusing, but remember, so once Jay starts to collect, Sally will get more because she started to collect early. She will end up with a total that is less than what she would have received off of full spousal benefit, which would have been $1,500. Okay. Another thing to note, if Jay passes away, Sally will receive 100% step up of his, i.e. $3,000 per month, even though she collected on her own retirement. And I'll go over a widow benefit in a minute. But that's just an important note that if the higher earner does pass away, the other spouse can step up and receive theirs. Now, I know maybe tonight at 7 something o'clock or 6 something o'clock on a Tuesday, maybe this isn't all making sense. And trust me, I've looked at this over a lot. So If there's a scenario in your world that you want to go over with your relationship manager to see, what scenario or what puzzle pieces make sense in terms of when your spouse takes it versus you, just reach out to us and we can go over it. But the important thing is to understand there are different ways and different times when you can collect your benefits. The trouble today is, prior to 2015, you could kind of double dip where you could collect on your own and then collect your full spouses. The IRS kind of figured that was a loophole and they kind of got rid of it. So this is why you see when she's adding the two together, the benefit is still less than what she would have received from her full half spousal benefit. Okay. Any questions from that? And please, these questions are anonymous, so feel free to chime in. And I know this stuff can be a bit confusing, but again, like I said, just reach out to us if you have any additional questions. So this segue is nice. And, this is kind of the unfortunate scenarios related to Social Security, the widow or widow's benefit. So at full retirement age, you get 100% of the deceased worker's benefit. There's one little wrinkle here. Remember when I said you can start collecting on your own at 62? On the widower's benefit, you can collect as early as 60 and you get 71.5% of the worker's benefit. You can collect reduced benefits on one record at age 60, then switch to reduced or unreduced benefit on the other record at age 62 or older. So perfect example, 2 years ago, I started working with a new client. Unfortunately, his wife passed away and he was 4 years old. And he didn't know that he could collect his own Social Security benefit. And then once he got to his full retirement age, he could step up and collect his full spousal's benefit. So he was essentially leaving, $1,500 on the table, not knowing that he could collect his and then step up and get the full amount of his spouse's. So like I said, each scenario is different, but it's important to check in on these things because the Social Security's office isn't going to just call you and say, hey, you're missing out on this benefit. Why aren't you collecting it? So these things you just got to, stay on top of. And that's why we kind of ask these questions and have these webinars to hopefully educate you and maybe raise the questions to help you out. Benefit of divorced spouse, another unfortunate situation. So you can receive benefits from an ex-spouse if you have been married at least 10 years, okay? You must have been divorced from the spouse for at least 2 consecutive years. You have not been remarried. And of course, your ex-spouse had to have paid into the Social Security over the years and has starting to collect on that benefit, right? And again, like I said, the scenario, the Social Security office isn't going to pay you both in most times. So if your benefit's $2,000, your ex-spouse's is $1,500, they're not going to give you $3,500. They're going to give you the $2,000. Okay. Will my Social Security be taxed? I kind of hinted at this, and on the way in you get taxed, and unfortunately on the way out. So if your modified adjusted gross income is above $25,000 for an individual or $34,000 for a couple, you will be taxed. You're taxed up to 85% of the benefits you received, and it's treated as ordinary income. So just as income you were earning as salary W-2. Believe it or not, about half the people who get Social Security pay income taxes. So not a lot, considering, and it's considering how low those income numbers are. So at the end of the year, you will receive what's called a Social Security statement or an SSA 1099. Also important to note, when you do start collecting and file for Social Security, there'll be a form that you fill out and you can proactively withhold taxes up front when you receive your payments. So if you work with your relationship manager and you're thinking, okay, our income in retirement is going to be $100,000. So that means our tax bracket's going to be 15% federal, 5% state. Maybe it makes sense for us to withhold that up front on our Social Security payments. So come April, we're not having to scramble and worry about any additional tax payments. So that's something you can proactively sign up for and utilize when collecting your Social Security payments. Apply online. So if and when the time comes, the most convenient way in today's world is just doing it online. You can also call the Social Security office to schedule an appointment, or, God bless you if you decide to go into the Social Security's office without an appointment. Like I said, if I had to rank these, I would definitely try online first and then calling someone. If you are, getting close to 65 years old, it's definitely recommended, even if you're still working, to sign up for Medicare Part A, even though you're not going to be collecting it. Part A is free, but it's just important to get into the system. So when you retire, you're already ready and, it's easier to apply and start getting these things. Okay. Any questions from that? Okay. Quiet group. So how does Social Security fit into my plan? I'll quickly go over this. Again, our segments. So as I kind of talked about, even when you're making money, budgeting is obviously super important in terms of how much you can save and put away for investing, but also it's very important to understand, how much money am I going to need to live off of. So what you need to do is revisit your budget. So if you're getting to the point of retiring, it's really, a good step or stage to practice for it, right? Understand your baseline net income. Social Security is going to be obviously a key part of this. Could be 40%. Obviously, like we talked about, the timing of when you start taking these payments influences the amount you will receive. If you're fortunate enough to have a pension, rental income, or other things that help supplement expenses, awesome. If you have 401ks, 403bs, IRAs, eventually you will have to what's called take a required minimum distribution, which is at age 72 years old. But in some cases, maybe it makes sense to start taking money out of those accounts now before delaying those bigger payments later on, right? So what the question you should be asking yourself is, if I'm getting $2,500 from Social Security, but my expenses are $6,000, how am I going to fill that gap, right? Is it from my investments? Is it from other needs, right? That's where you start kind of working in your budget and understanding, okay, how much money do I realistically need to live off of? And have I saved enough? Am I managed correctly in terms of getting that out? Investing, right? So review your goals, make sure you're still on the same time horizon in terms of, retirement can last a long time. So understand you're not going to take all your money out at once. So if it's going down or going up, you always have a flexible place to get money to help supplement or bridge the gap with Social Security and other needs. If your goals have changed, make sure you're making adjustments with your accounts and talking to your relationship managers. Review your risk against your goals and make sure all this stuff is in line. These are the things we're doing for you on an everyday basis. Right, retirement income, like I talked about. Is your portfolio flexible enough? This is where we have stocks and bonds and all different kind of diversification within your accounts. So no matter what's going on in the world, we can bridge the gap in retirement to say, if you need the additional $3,500 a month from your account, we can easily supplement that from your investable assets. Tax planning, it's just as important in retirement or thinking about retirement, because ideally you try to keep your tax brackets as low as possible in retirement so you can net the most amount of money while you're taking either Social Security payments or money out of retirement accounts. Like I said, Social Security in most cases is taxed. So identify other accounts that may not have tax implications to you to help keep your tax brackets as low as possible. We call that our distribution strategy. Where do you end up in terms of, your tax brackets? Should you take out more or less? So this is kind of where we talk about, if you have a lot of money in pre-taxed accounts, so traditional IRAs, traditional 401ks, every time you take money out of that, you have to pay taxes. But if you delay taking out any money from those accounts, eventually, like I said, when you turn 72, you have to take a required amount from there. So maybe in your 60s, you can start to take out a small portion from those accounts to mitigate or limit the amount that you may be having to take out later, because that amount is required, and that required amount could jump your taxes into a higher level. So these are the things that we're helping planning for you. And like I keep saying, how much is the gap you need to bridge? And if you are bridging the gap, is it affecting your overall tax brackets in retirement? Also super important to understand, if you are on Medicare, if your tax brackets or taxable income goes up, it could affect IRMA, which affects your annual premiums that you have to pay into Medicare. So these are all things that, we got to keep our eye on and monitor for you while you're in retirement. Because, if you happen to jump into a whole other tax bracket in IRMA, that could cost thousands of dollars in annual premiums with your Medicare expenses. So important to manage that. And finally, complete your estate plan if you've been putting it off all these years. I know this is something we've discussed. Definitely want to revisit. Attorneys are available. Please utilize them. We can always recommend a good one to you. Widows and widowers, remember that example I talked about that new client that I helped understand that they were missing out on that benefit. Understand if there's, implications going on in that specific scenario, if there's income that can be received following the death of a spouse, okay? And really an estate plan is, even with the perfect estate plan, everything's kind of a mess to begin with. So to try to keep it as easy on your loved ones, it's really important to get that done. Questions? Happy to answer any. As I kind of hang on here, I talked maybe a little bit longer than I anticipated, but we're here at 6:40, so happy to help you guys here. If you want have specific follow-up with me, you can email me directly at mark.sullivan@onedigital.com. I will show our disclosures for today. And again, this was recorded. I hope I did it correctly in terms of the recording so we can share with others. But I appreciate everyone taking the time today to talk about the fun stuff that is Social Security. And again, anyone have a question, please shoot one in the chat box and I'll help you out. But I'll hang on for a minute, but if everyone is in good shape, then I'll let you get on with your day, or night, that is. Okay, so again, thank you all for your time today. I hope you have a great holiday season with friends, family, and a healthy one as well. I have a question. Will you be able to get a copy of this recording, or do we need to request it? What we will do is, if I recorded this correctly, it will, when we send out kind of our newsletter or blast company email, the attachment of this recording will be in there. But if you don't see it within this week, just reach out to us and we'll hopefully be able to send you the link to the recording. I think we'll probably upload it onto maybe our YouTube channel or something like that. So it should be accessible to you. But like I said, if you have any additional questions on Social Security or any of your accounts, please reach out to your relationship managers. We're always here to help you guys. And I hope everyone has a wonderful Thanksgiving and holiday season.